Are we as investors about to see another massive short squeeze? And where are the big money flows currently going? In today's video, we take a look at the biggest breakouts of the last week, and of course, the new key level for the S&P 500, the most traded zone. What's going on in the options market? Why does this stock matter? And why did we see a Darkpool trade possibly show it all? Yes, there's a lot to break down in today's special edition. This is the weekend report. Let's get into stocks, commodities, and cryptos now together. Not to be missed, guys. We'll see you in a moment. Well, welcome back, everybody, to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. What's going on with Tesla and the rest of the market, and of course, why we need to be paying attention to these jobs reports more now than ever before. So let's get into the jobs report, then we'll talk about the state of the market right now, and then we'll talk about some of these nasty options that are starting to appear. So first up, the non-farm payrolls. This is the jobs report for anyone that doesn't know, and it happens once a month. And we got another pretty strong number on the surface, 139,000 new jobs added. Sounds pretty good. Private education and health services and leisure and hospitality adding the most. And of course, we saw some declines across the board, notably, of course, in retail trade. We saw a decline compared to on the previous year. But here's where the kicker happens. 95,000 jobs actually were revised down over the last 2 months. And considering they were pretty good read data points, we now are kind of in this point where it's a good number, revised down, a good number, revised down, and these revisions are getting more severe. So should we even be paying attention to the jobs report? Well, as you may know, it's actually a lagging number. So it's not so much that we pay attention to it. What we really use it for is potential large trade moves and pushes of liquidity to the next level of equilibrium. And we may have just seen that happen as of the Friday close. And we'll talk about that later on in today's video. But let's now look at the 3-month rotation. I thought with the end of May, we might want to start thinking about what's been kind of hot recently and have we been looking at the right areas? Well, of course, semiconductors has been the one that most people have discussed. Why? Well, it's the third best sector of the last 3 months, and of course has had one of the best rallies back up. We've also been discussing the idea that semiconductors versus the SPY and technology stocks, when they're leading, it's usually a good sign that breadth can continue because, of course, the backbone of the US economy is innovation and great technology companies. But what the other interesting thing's been is two of the metals that we've liked, which is, of course, gold and silver, Bitcoin, and just in general, XME. A massive pickup, especially over the last week, as we now continue to see this stubborn US 30Y yield. And of course, we're seeing these tariffs start to take control of certain things. So let's have a look at the broader market. And I had to laugh when I saw these charts because, yeah, this is an all-time high here. Trend Labs showing that Canada is at an all-time high, that we're seeing the Ireland overall stock exchange at an all-time high. Who'd have guessed it? And we're also seeing, look at this TA12 Tel Aviv stock exchange 125 at an all-time high. And we're seeing, of course, Peru's stock market at an all-time high. And what I guess this is telling us is that everyone is bullish across the world in tariffs. And you would think that this is not going to be the way it is, but it's a mixture of government money going in, and of course, it's a mixture of heavy optimism. And this is the type of thing that happens when everyone gets very keen and the bull spirits are out and around. And of course, this is being exacerbated by so many good statistical reads. We've talked about this a few times. Obviously, we never ignore the Zweig breadth thrust, and we then saw a de Graaf breadth thrust, and of course, we've had a 7070 breadth thrust all throughout this tariff recovery so far. And 3 weeks later, which we just backed in, we've now had another win, which basically means that 100% of the time, we've usually seen these Zweig breadth thrusts with these other ones come through. And again, if you then look at 2 months later, you've got to remember the stats are at this stage that the market wants to recover. So this is basically showing that funds, whenever the dips are happening, are starting to buy back up. But that's not to say that we can't have what we call a rug pull or a waterfall effect. And it really comes into I guess you're going to say vision when you start to look at the options market, which we'll do in just a few slides. Let's have a look at the NASDAQ 100 rally from when it loses 20% below a 1-year high to negative 2%. That is its actually found a massive recovery. Does it tend to do better? Well, again, it's another one of those big stats. We don't have too many data points here. They often come off epic sells because, of course, these are the classic bear markets. But you will notice here that there is one that I just kind of wanted to mention, which is that one that we keep talking about from the 1990s period. The reason we want to bring that one up is because are we in an AI boom right now? Yes. Is AI pretty much the talk of the town? Of course it is. Every single one of these earnings call, we just see them mention AI 50,000 times to try to get their stock price up. And remember, back in the dot-com boom, we saw something very similar, which was, of course, that we had everybody just talking about www. We've got a website, guys, and it's got some pictures on it, and therefore we're worth $1 billion. Yeah, that was pretty much pets.com. If you're not aware of the story, you can go check that one out. But let's now have a look at what this is all telling us. Well, saying that, of course, optimism is here for now, although we have to be, skeptical of some of these options levels that you're seeing. And when we get recoveries like this, again, 1 month forward returns, quite a few reads here, another one of these reads that gives us a 100% statistic. Now, of course, that doesn't mean it's going to happen again, but they are pretty good bull reads. Now, here's where things get a little strange. Everyone is stacking one key level. And if you guessed it was 6,000, then you'd be absolutely correct. Take a look at this one, guys. 6,000, massive options level, massive call wall, exactly where we closed on Friday, the most traded zone of the last rally where we saw that distribution, and pretty much the most important point. If we break through 6,000, could we be looking at an all-time high? Absolutely, but this is the level that matters. We've got some other charts coming up later on to really justify that. Now, what about the AI boom? As we mentioned, AI boom is now being accredited in 2025 to real GDP growth. So we're starting to see companies sack people and companies, of course, basically become leaner, meaner fighting machines as they start to use chatbots and all other things to replace us in the workplace. Hopefully that's none of you guys out there, but yeah, AI is coming for a lot of our jobs. And I always say it's good to be prepared. So make sure you know what's going to happen in the future. It is always important. First 100 days and beyond, we've got two kind of working strategies here. One of them is the concept of a rally into a dump where tariffs basically front load basically massive demand, then they peter off, and then we have problems somewhere between 200 and 250. And remember, we're about here right now. And funnily enough, we're literally getting closer to the highs. Remember, some of these markets did go on to make new highs. So yeah, it's an interesting chart that we've shared quite a few times. And the other one, of course, is the narrative of where we are in the current cycle. Now, I tend to believe we're in these two here on the right-hand side. And in both of these, we had strong recoveries to all-time highs. But at the same time, of course, bad things ended up coming through from it. So the key here is going to be to stay agile, to stay aware, and to stay risk managed throughout. And one of the big reasons we believe this is because two of our favorites are going ballistic, gold and silver. And some of you are probably bored of me talking about gold and silver, but they're a big deal here in the last couple of years, specifically silver here in 2025, and obviously gold here for the channel, where we talked about 3,000 and 3,600 several times over, or a lot of the time, throughout 2023, 24, etc. So why is it important? Well, look, silver tends to play catch up to gold eventually. And of course, it's had some big runs. Now, I like this optimism here. I've got to say, it's pretty funny and it's massive optimism. But if you were talking about pure percentages, you would be talking about a 1,000% return here on silver if it was to do something it did in the previous cycles. Now, I'm not quite a believer of that type of thing here. But what I do think is, of course, silver is on the squeeze at the moment. It broke above that all-important 34.50, 35 level. It's closed the weekly, and it's kind of said to us, hey, I'm ready to actually do something, hopefully. And as you know, if you've been trading silver for a while, and especially if you've been some silver bugs through those hellish 10 years, which we haven't been, but if you were, well done to you. You've been consistent, and I've got to give it to you. Well, those particular people would know that silver often is known for fake busting. Though I think this time could be different. Silver junior miners to silver ratio, as you can see here, Ottavio Tavicosta basically coming out and saying, you know what, pretty good breakout. We've done this on gold juniors before as well. They're doing quite well. And basically, we're just seeing metals break out across the board. But remember, silver and gold are a little bit different. They're being purchased by central banks. They're being set up in this kind of bricks versus Swift kind of thing that's going on here. And of course, we are in currently a currency, what I call war. Now, why is that important to note? Well, because if central banks are buying it, it underpins demand and it ultimately ends up forcing the kind of supply demand dynamic. And we know that gold and silver, specifically gold, is just not being produced at high levels anymore, specifically because there are just not enough mines going, and it's pretty much just been the exact same for quite some time. So I think it's important to note that we've got kind of like almost a finite resource here. We don't have unlimited amounts of gold, and that is helping it. Now, I mentioned before, and I alluded to Hood, the company that everyone's been speculating on going into the S&P 500, having a massive trade on it just before the rebalance. Well, it turns out the S&P 500 isn't doing a rebalance, and Hood fell 6% after hours. Now, why is that important to us? Well, of course, it just shows you here that sometimes these dark pools do have instantaneous reactions. This was a whole sequence of trades coming through, and they do tend to be a bit faster, kind of like sweeps. And basically, for anyone that doesn't know, a dark pool is effectively a transaction that occurs between two massive financial institutions off market, and then it's reported into the market. So you usually can't see it as it's going through live, but it's excellent to come here to the show. Make sure to subscribe for it and to be able to see some of these that we share. And we do share some of the biggest ones. Do you want to use it as the only reason you do anything? No, but when you get a number one trade, you've got to be paying attention. Central bank management time here. What's going on? A little bit of an increase in liquidity in both the Fed and the worldwide central banks. We're specifically seeing the PBOC. So that is, of course, China adding quite a lot of liquidity. I did say I'd do a special on it this weekend. Haven't had time to pull the data for us yet, but we will get to that over the next week. So stay tuned for it. And the S&P 500 is currently trading, as you can see here, at the most traded zone. Now, it is starting to show signs of exhaustion a little bit here on the daily chart as it gets up to these levels, but it really is about this level. Let's have a look at the weekly here to get a bit of an idea. You can see here that this is the most traded area through all of this range, and we saw the most amount of trades. This is going to matter. If we break above, probably inflation numbers, something like that might get us above, then we could move all the way to 6110 and then maybe even an all-time high. If we are going to see some type of rug pull, generally you're going to see it around this level. And the reason is quite simple. It's just the place that it usually would occur. It's the most traded area. And of course, it has got the most amount of options at stake. Now we're in what we call a dull market. That is a series of higher highs, higher lows, but it's kind of barely going up. These are not markets that you notoriously want to predict to short. We've obviously talked about this level several times before, but we haven't got a lower low yet. Now, if we get a lower low, let's say this week we break underneath something like a 59.25, that may instigate some shorts, but at this stage it's still a series of higher highs and higher lows, so that's going to be tough. Let's move over to the options though, and this is where things get interesting. Even on the 0 DTEs, you can see each day is stacking these 6,000s, particularly 6,000 here on the 10th, 6,000 all over the 9th. And then, of course, we've got 6,100 being the next level in 10, which is that key zone we talked about, the kind of the all-time high. So if the market does break through 6,000 close, next level, according to the options market anyway, is going to be the 6,100 to 6,110 zone. So yeah, get ready for that if it does break through. And each day of the week, each day pretty much into the OPEX of this month, which is the main options expiration, it's just all about 6,000, 6,000, 6,000, 6,000 pretty much, and somewhere around 58.50 ultimately on the put wall. Tesla, this is interesting stock at the moment, of course, all sorts of things going on. At the time of this recording, I haven't seen any new updates from Elon or Trump, but I'm sure that could happen over the weekend. But realistically, people are betting big time on both the long and the short. It may try to just sit around for a little bit, but if you were lucky enough to pick it up on the 280, by the way, it was a great put wall. My goodness, that was huge. Then well done to you, because that was actually a pretty nice pickup. It was a bit of a calculated move, I guess, onto the Friday move. And we did see 280 hold. So 280 is the most important support. 300 is the second support. And it looks like 315, 320 is where we start to get really more call action. So more bulls start to come in. What about NVIDIA? Well, NVIDIA is the same. It's always the same. 140, 145, 140, 145. We break through 140. I could see us actually starting to move up here again. What I mean, it's 145 at the moment. But if we hold these levels and we see these closures, then we can start to move towards that really powerful 150 zone we'll look at soon. We get through 150, of course, most people are going to be looking at the 165, 170 at that area. And that's where really Nvidia is free to move. But you've got to remember, semiconductors are picking up here in the markets and they're really sustaining, which is, helping to really buoy everything. And you've got to just remember, semiconductors tend to rule the US market along with big tech. And at the moment, they've both been quite strong. All right, let's now take a look at the rest of the market. We'll look at the leaders here in terms of whether we're seeing any signs of worry. The VIX dropped off after that really key non-farm payrolls result. We did see quite a large move off it. Obviously, it doesn't have to be a short. When we see massive VIX expiration and we saw that backward dated as we did in the previous video, go check that out if you want to check it out. We knew that it was probably going to be a fairly large non-farm payrolls event, and it tended to be. I mean, every market was moving. The volatility market dropped off, but the US 30-year actually went up to 5%. That magical area that seems to keep triggering certain things in the markets. What happens if the 30-year keeps going up this week? Will we see another intervention? Will we see the Fed? Will we see Trump? Will we see something else? Remember to watch 5.5 to 5.1% quite a lot, because this is an important level and it tends to trigger certain events happening in the markets right now. When we look at the bonds market, it started to slow down in terms of freaking out. And a lot of people don't understand this. And don't get me wrong, I would think the bonds market would be more freaked out in terms of corporate space, but it's not. And if it isn't, we can't sell. So this has been a pretty good read on showing us early risk. We did see that early risk coming through a little while ago. The yields went up. Then, of course, Trump, revised and changed some tariff stuff. And then suddenly we've pulled it back down. So this will be one of the key reads we continue to watch this week. And the US dollar somehow held its 98.50 area. So really just barely holding on to this support. And of course, if it drops 98.50 this week, closes, we're thinking it could go to 95.50, 96 on the TA charts. Let's have a look at silver gold ratio. I got to say, I'm happy. I'm thinking a few of you are happy. Yeah, I've been crapping on about silver too much. I know you guys have been bored of it. But, I don't ever think it's boring when you see a coil like that. It was one of those things, the metals has been pretty good to us the last couple of years, specifically these two currencies, silver and gold. They are currencies. And the reason is because it's just been relatively technical and paying a lot of attention to the geopolitical risks, the central bank purchasing, and more importantly, just all of the positives that are leading into these gold and silver moves, and of course, Bitcoin as well. Gold specifically didn't do as well on the week. You can see here it actually went back down and it's getting closer to that 32.88. So obviously we want to see it above now, 3,400, but it's getting back below into this 32.88, 32.90. So it sold off a little bit there on that strong US dollar near the end, but still in a series of high highs, high lows. And silver, yes, it did break 35, 34.50. And we've been looking for that for a while. So theoretically, it's free now to run. It's the best level it's been since 2012. And you can see here, it actually is closed above all these previous points other than the wick here. And it opens up to me maybe a 40. Can we get 42? That would be pretty sweet. That's actually been a target I've looked for quite some time. 42.60, 42.50. So yeah, let's hope it's kind of on the run here. No signs it isn't. So at this stage, we have to kind of go with, if pullbacks occur, we're looking for bullish price action. The cool thing when things break out is you can start to play with the smaller timeframes and look at it. But like anything, nothing's guaranteed, guys. You've got to take risk management into consideration. Now, US oil did break on the Friday close. And I was kind of suspecting, I've been pretty neutral on oil. But I did see something I liked last week, and it got me feeling a little bullish on at least the shorter time frame. That is just a couple of days into maybe a week or two. And yeah, that's a fairly decent break here above 64 a barrel. Obviously, it didn't get above this high, but to me, it does look a little bit more bullish. What do you guys think? Looking a little bit better than it used to? Weekly gets a new high close here. But yeah, I mean, these are basically doji candles, closed above those. Next level, probably about 70 a barrel. Let's see if we can actually get through. Oil's been pretty tough trade unless you've been mostly short all year. Tesla, 280, 300, 280, 300. We're basically back in that support zone. So it's tough with Tesla. We've got the 315 calls. We've got the 280 puts. And then, of course, we've got the 300 puts as well. So, yeah, we're just stuck in a range here for Tesla. It's going to be a bit of an evolving storyline. But notoriously, Tesla is quite resilient to getting buyers of the dip to come back in. This is an inside candle as well. So we'll see how we end up over the week. And we'll keep watching that one very closely to see if there's any edge. Nvidia is starting to get a little exhausted. Same time as we hit 6,000. It certainly is overbought. You can see previous reads that we've got similar to this haven't been too good, though this one here was not too bad, coming right off that bottom and here as well. But I would say if you're actually averaging them, generally you do get a bit of a sell from these areas, especially when you're at a resistance. Not sure that's going to happen yet. I mean, it's just been strength to strength to strength, but we will be watching. And if you're in the position, hey, it looks pretty good. If you're not, would you really add here? I don't know about that. It doesn't look that great in terms of adding. What about copper? Copper fell a little bit after going through. Couldn't hold the weekly, which I think is interesting. So see here, copper did reject underneath the 490. 490 still to watch this week. And I did notice that RK and really anything to do with hyper growth stocks were breaking out through the Friday session. We saw heaps and heaps and heaps of setups. We saw heaps and heaps and heaps of exuberism. Everyone was getting super excited. And it pushed one of those markets you don't see break out that often, the Russell, the dreaded Russell breakout. So clearly everyone's going to be talking about this. It's the inverse head and shoulders that everyone can see. It is a big breakout. It's a big close. 225, 230 first target here. What do you guys think? Is this the real deal? I mean, it is the real close. You can't deny that's a technical break, but it is the Russell. And it always tends to be one of those like nasty style trades. You know, sometimes it gives you false hope or something like that. The good news is the right-hand side is not that deep. So in terms of technicals anyway, you'd be under around that 200s, that 198.50 from the technical level. NASDAQ, again, a little bit of exhaustion here from some of the reads, although it still is in a series of higher highs and higher lows. Could a rug pull be coming? We'll probably see it in the options world first, and dark pools will come through as well. We just haven't had that at this stage. So resistance one still coming up, 22,150. Seems like the most logical current case for the NASDAQ, but it's been an amazing run so far up that market. I thought we'd just quickly look at the Chinese market, which is also at resistance at this stage. And you can see here that it came off that nice bounce. And if it does keep going, get through 25,000, then it could really start going ballistic. So the thing about the Chinese market is when it runs big time. And you can see that by looking at the left-hand side. It goes ballistic very quickly. So yeah, this one is certainly worth watching. What about Bitcoin? Well, it found some resilience, came down, swiped it. Very interested in 107. I think if we close above 107, pullback's probably meant by bull demand and maybe an all-time high. 125, that's actually one of the levels I've always looked for Bitcoin. So I'd love to see it. And 107. For now, this is kind of like the trinity of geopolitical risk trades. You've got your Bitcoin, gold, and silver. And they're currently still looking quite strong in these markets. In terms of the week ahead, the main thing is a bunch of bank holidays. We do have one in Australia, where I'm from, on, of course, the Monday session. Then we have some in Eurozone. And then, of course, we have CPI. So people are still going to be paying a lot of attention to inflation. We do have an inflation graph over on X. So that's the FX Evolution channel over on X. Links in the description down below. That'll show you that at the moment, we're not following the 1970s narrative, which is the overlay that we've shown a few times here before. But inflation will be watched. Has it slowed? Have tariffs taken effect? We'll find out. And then, of course, we've got PPI and prelim UOM consumer sentiment. As we always like to do on the channel, we'll do a quick wrap up here. In general, I guess the markets still look really bullish. Of course, the stats are very, very bullish indeed. I think the main thing is there is a lot of opportunity. There are quite a lot of single stocks that are playing catch up from the Russell that technically have been breaking out. And on top of that, you've got, of course, things like silver that had a phenomenal week doing over 10%, and so many metals also going absolutely ballistic. It seems to be like, any other kind of year from that aspect, but the main problem is the after hours risks. It's pretty much just the tariffs and anything else in terms of policies going on around the world. So I guess 2025 is exactly what we thought. Up, down, and all around. And in many ways, one of those years that you have to be agile, nimble, and of course, risk averse. I hope you guys have a fantastic weekend with your friends and family. We'll see you for the start of the week. And obviously, it's going to be another one of those big ones because who knows what's going to go on in the Twitter world. Yeah, it's going to be wild, guys. Bye for now.